stocks in Asia were higher on Monday, with Hong Kong's Seng index leading the gains in the regional markets as it rallied 1.5% after pro-democracy candidates surged to a victory following a record voter turnout. Meanwhile, there were mixed signals from the trade front, and investors were digesting the reports that a Phase 2 trade deal between the two countries is unlikely to come soon. At the same time, China said it would seek to improve protections for intellectual property rights, including raising the upper limits for compensation for rights infringements. Investors took it as a sign of Beijing's commitment to resolving the trade dispute with Washington. And as such, the Shanghai Composite rose 0.72%, the Nikkei 225 in Japan rose 0.78%, South Korea's Kospi advanced over 1%, in Australia the S&P ASX 200 gained 0.32%, and as for individual stocks, Westpac shares declined 1.3% after the lender revealed its response plan after Australia's anti-money laundering and terrorism financing regulator filed for civil penalty orders last week against the bank. In Europe, stocks were also higher as investors continue to express hopes for further progress in the US-China trade negotiations. Market participants cheered the statement from the US National Security Advisor Robert O'Brien, who said that a Phase 1 deal with China could still be reached by the end of the year. The Pan-European Stock 600 climbs 1.05%, and the FTSE 100 in London moved higher by 0.96%. On the data front, the IFO Business Climate Index showed that German business sentiment improved in November, coming in at 95.0 compared to a revised 94.7 in October. Assessment of the current situation edged up from 97.8 in October to 97.9. The IFO Institute is expecting a 0.2% GDP growth for German economy in the fourth quarter. In the United States, the markets resumed the rally due to increasing expectations that China and US will reach a Phase 1 trade deal. The S&P 500 and Nasdaq Composite hit all-time closing highs as they rose 0.8% and 1.3% respectively. The Dow Jones Industrial Average also had a record close, gaining 0.5% to 28,066.47. Apart from trade-related events, corporate news added to the positive sentiment in the markets. In particular, Charles Schwab continued it would acquire rival TD Ameritrade for $26 billion in an all-stock deal to create a new company with more than $5 trillion in assets. TD Ameritrade shares rallied 7.6% on the news. Meanwhile, LVMH has reached a deal to buy jeweler Tiffany for $16.2 billion in cash. The acquisition is expected to close in the middle of 2020. In currencies, the dollar was mixed against the majors on Monday. The euro-US dollar extended the decline from local highs just below the 1.11 handle and barely stayed above 1.10. Decent IFO data for Germany failed to inspire euro bulls, with the downside risk persisting for the common currency as long as the pair remains at least below the 100 DMA at around 1.1080. The USD-Japanese yen, meanwhile, rose to 109.00 at the start of the week and extended gains above the 200 DMA on Tuesday. The pair registered two-week highs around 109.20 and needs to hold above the 109.00 level in the short term to confirm a local breakout. Should risk sentiment turn sour anytime soon, the dollar could correct lower and get back below the above-mentioned moving average. As for oil prices, Brent crude remains stuck between the 100 and 200 DMAs these days and struggles for a clear direction amid conflicting signals from the trade front and worries about the upcoming OPEC Plus meeting due next month. The futures failed to confirm a break above the $64 handle and turned lower on Monday. Now Brent needs to get back above the $63 handle in order to regain the upside bias in the short term. That is all for today. Thank you so much for watching. Please click subscribe to always be in touch with the latest market news.